Hi, good evening, everyone, and welcome to our webinar. Thank you very much for joining us, everyone. So I will just get started now. And today with me is Daniel, and I'm sure many of you will probably remember him as well, and you've probably previously spoken to him as well. It's great to see so many familiar names and faces that have attended our webinar today. So again, guys, thank you very, very much for all of your support. Now, to get started, if anyone has any questions, please feel free to type any messages into the chat box. And at the end of the webinar, we will be more than happy to answer any questions that anyone has. So on that note, I'll get started. So first and foremost, let me show you the agenda for today. Thank you. So the things that we'll cover today is why should you look to invest into the UK property market? Why Manchester? We'll talk a little bit about Sheffield, Birmingham, and a little bit about who we are, what we do, and how we help our clients, developments that we currently have available. And then we'll go through the processes of how you go about buying a property in the UK. And then we'll open it up to some Q&A for everyone as well. So to start with, my name's Hiran Naker. I'm the Managing Director for Legacy. I've been based in Dubai for the last 12 to 13 years. I'm actually a UK qualified financial advisor. I've been advising clients on various forms of investments for over 15 years. I manage and look after clients in the Middle East and the Africa region. I work with a lot of family offices and individuals throughout these regions. We're specializing in helping clients to build their property portfolios for their future and for their legacy and also their succession planning. We do provide an exceptional turnkey investment and a full service consultancy to international investors globally. So I'm going to start today by talking to you a little bit about the UK and why people are looking more and more to invest into the UK property market. So first and foremost, the UK has very attractive rental yields. The UK offers some of the most attractive rental yields due to high demand from professionals and students, often surpassing those in other major global cities. It's also got strong capital growth. The UK property market has a history of strong capital growth, with prices increasing on average over 5% per year over the last 100 years. And it's driven by strong economy, limited land supply, and global appeal. The UK's got a strong economy. The UK's strong diversified economy creates healthy property demand from both businesses and individuals, and benefiting investors everywhere. It's also got excellent transport links, making it a convenient place to live and work, boosting property demand. Now, the UK has, for many, many years, had a huge shortage of homes. UK has a severe housing crisis, especially in the most prosperous places in the greater southeast areas. Across England, the average house costs more than 10 times the average salary. But the positive news is that the vacancy and empty or untenanted apartment rates is below 1% across the whole of the UK, which means that if you have an apartment, you've got below 1% chance of it sitting empty. And that's mainly down to the fact that because of the shortage of homes in the UK. And the space per person for private renters has dropped substantially in recent decades. And what I say to clients is it all comes down to supply and demand imbalance in the UK. There's a backlog of millions of missing homes in the UK, and compared to the average European country, UK today has a backlog of over 4.3 million homes that are missing from the national housing market, as they've just not ever been able to get built. The housing deficit would take at least half a century to fill if the government's current target to build 300,000 homes a year was reached. However, even in the best year pre-COVID, the UK just built just under 100,000 homes a year. So it's got a huge shortage and not enough houses are being built to even meet this current demand of 300,000 homes a year. So the supply and demand imbalance is going to continue in the UK for decades and generations to come. And this here gives you a very good example of just why there's such a big shortage of homes. This graph here shows you since 1971, the population of the UK and all the way up to 2021, 2022, and 2023. And as you can see on this, on average, the UK population has literally tripled and quadrupled over the last 40, 50, 60 years. But the UK is a very, very small island, and there's only so much that they can build there. And unlike many countries around the world, you can't build into the oceans and the seas in the UK. So basically, as the population rises, there's not enough homes that are being built, which means property prices only continue rising. And this, for some of you that are fairly new to UK property, this is just giving you a good idea of where the major cities in the UK are, starting from London at the bottom, going all the way to Manchester at the top. When you look at the top half of the country, that's Scotland, and on the left-hand side is Ireland. So basically, the UK is between London and just above Manchester, and that is the UK itself. So with the population increases continually, this shows you the shortage of homes and why we're getting such a big shortage of homes in the UK at the moment. Then looking at average UK house prices, you can see here from this graph, since 2012, even right up until 2022, average UK property prices have gone up by over £100,000 in just the last 12 years alone. And obviously UK property prices are only continuing to rise as we go. But what this does show you is a good strength and a positive thing on UK property prices, showing that they don't really go down even during pandemics and other global recessions and everything, which I'll show you in the next slide, but shows you the strength of UK property prices only continuing to rise and go up. On this graph here, which is from the UK Land Registry data, which is also available on the UK government websites, this shows you on average how UK property prices have only continued rising even since 1965. And when you average this out, it's showing you that UK property prices have actually doubled in value almost every 10 to 15 years. But let me show you some key times throughout this period. Like, for example, in 1990 to 1995, we had a global recession, which was the Persian Gulf War crisis. You can see from there, UK property prices didn't really drop. They stagnated for about 5 years, but straight after 1995, they shot up. Then if you look at 2007, a little bit more recent, when we had the Lehman Brothers global market crash and recession, even here it's showing you that UK property prices only took a very small dip for about a couple of years. And that was mainly in London. But straight after that, in 2010, UK property prices started climbing and going up again. But also to add to this, UK was the fastest economy or property economy to come out of recession compared to any of the other major countries around the world. In 2016 is when we announced the referendum, Brexit, or the exit from the EU. A lot of people expected most Europeans to leave the UK, but guess what? Nobody left, and instead, UK property prices only continued rising because the population was just continually increasing. And then in 2020 is when we had COVID, global pandemic. Even then, UK property prices only continued rising. And straight after that, UK property prices continued rising because people had saved a lot of money, moved into larger apartments, and everybody sort of like upgraded over that period while they were in lockdown. So the positive thing for new investors into the UK property market is that UK property prices only tend to go up. Compare this to many other countries around the world where it's like a yo-yo, where it has a 5 to 10 year cycle where property prices go up and then they take a dramatic go down and then up and down. UK shows stability for investors. And this is why people have been investing into the UK property market for decades. Now, in terms of the 5-year forecast, to give you a bit of an overview of what's been happening in the UK, over the last 5 years, UK property prices in the main areas such as Manchester grew by 7.9%. Leeds, Sheffield, and Birmingham not far behind, at just above or around the 6.9 to 7.8%. But if you look at London, London didn't grow very much because a lot of people find London has had its growth and is continuing to grow, but not as fast as other major cities. And if you had invested in the Northwest region, you would have got just under 25% growth and capital appreciation on your property, according to Zoopla and Savills. Moving forward, we're looking at about 28.8% or just under 30% house price growth in the Northwest region over the next 5 years. And rental is just as strong, going to grow at about just under 22% over the next 5 years. And that's according to JLL. So it shows you very good strength in still investing into the UK property market, where you can get both capital appreciation and high rental yields. And one interesting question I always ask my clients, if you had $1 million or £1 million today, when you look at Manchester, Leeds, Sheffield, Birmingham, or London, where would you put your money to get the highest return? And agreed, like most people will say, Manchester. So where should you invest in the UK? You should look to invest in rising markets with the following characteristics. You've got to look at cities where there's a rising property prices, strong tenant base, an undersupply of premium housing, strong employment opportunities and job growth, where the population growth is strong, thriving higher education sectors and graduate population, affordable entry prices, and also very good transport links that go throughout the whole of the UK. And when we've looked at this, we always look at the most upcoming cities in the UK that have these characteristics. And we found that the northwest of England is where is the #1 property hotspot and offers outstanding house price growth and rental growth, according to Savills. And they're saying that 28.8% house price growth by 2025 compared to the UK average of 21.1% and 3.3% rental growth year in, year out. And that's on top of what you're already making at the moment. So it shows you very, very strong characteristics as to why you should be looking to invest around the northwest of England and the Midlands and above. The city centre property markets in these regions offer everything you need to make a profitable investment. Now, we're going to touch a little bit on Manchester and why Manchester to start with. So I'll start by showing you some of the statistics and figures from JLL itself, but we'll start with a quick short video on Manchester and some statistics on here. I'm giving you a very quick brief overview, but we'll try and go into a little bit more numbers now. We'll start by talking about the infrastructure. So over the last 10 years, the UK government has put in over £8.2 billion of inward investment into Manchester. Manchester has the third largest international airport with 255 destinations it flies to, 22 million passenger journeys each year, 1 billion expansion plan that's being completed by the end of this year, and it also created 1,500 new jobs. But as well as that, it's got a very good overground system like the London Underground system. It's called the Metro Link. And the Metro Link goes all over Manchester and the Greater Manchester area with 7 lines, 93 stops, and also 40 million passenger journeys a year. So for the public transport system within Manchester is actually very good as well, and it's fantastic. So when you then look at the business growth, now out of the FTSE 100 companies, which is the top 100 companies in the UK, 85% of them are now based in Manchester or have an office or a presence there. People like the BBC, ITV, Sky, KPMG, Deloitte, they all moved out of London about 10 years ago and moved into Manchester. And furthermore, Manchester has had a rise of 58% in businesses that have moved and also started up in Manchester itself over the last 10 years. Financial, professional, and scientific is the fastest growing sector there at the moment. If you look on this is just showing you just some of the top 100 companies that are already based in Manchester now. And I'm sure you'll recognize many of these names, if not all of these names. So it just shows you the strength of Manchester as an actual economy and a hub for business and why so many people are living and moving there as well. But it's not also just about that, it's about the population growth within the city as well. So according to the Office of National Statistics, which is a government entity, they said Manchester's population is double the growth of, compared to the national average. When you look at the Manchester City Council, they recently said that Manchester's population is projected to increase by 70,000 people by 2025. And Deloitte said that even at the current rate of construction in Manchester, we'll still have a shortfall of at least 50,000 homes by 2025. So imagine this, you've got 70,000 people moving into Manchester, but you've got a shortage of 50,000 homes. Now, if you have an investment property in Manchester, that can only mean two very positive things. You're going to get great capital appreciation from your investment, and you're going to get great rental yields from your investment as well, from people continually renting your apartment. So this is the population growth. But it's not just about population, it's also about the education sector in Manchester, because Manchester does have some of the top universities in the UK now. Manchester's got 99,000 students attending the Greater Manchester's 4 universities. But most importantly, Manchester's graduate retention rate, so these are students who graduate, they don't go back to their home city, they actually remain in Manchester, they get the jobs at those FTSE 100 companies that I showed you previously, and that's why it's got a 70% graduate retention rate. It's the highest compared to any other city in the UK at the moment, and it's far outpaced London as well. As well as that, it's got 22 universities within a 1-hour drive, and 383,000 students within a 1-hour drive of Manchester as well. So what's happening is that these students are coming into Manchester on weekends and evenings and stuff like that, and it's also helping the economy to continue growing in Manchester itself. Furthermore, job creation. Centres for Cities is a government entity, and what they do is every single year they rank every city in the UK based on 2 very important things: population growth and job growth. And for the last 10 years running, Manchester has been the #1 city in the UK for both population growth and job growth. And this here just shows you the kind of offices and how much infrastructure in terms of jobs is going into Manchester alone at the moment. A lot of people ask me, well, where does London sit? And you can see clearly on this, London is all the way at number 20 because it's becoming a very expensive city to live in. And for businesses to be there, overheads and costs are very high. So they're looking at cities like Manchester, Leeds, Birmingham, Liverpool as to moving into across there because they're growing cities at the moment. Now, for the rental growth, Manchester experienced a 12.2% increase in average annual rental growth for 2023, reflecting a strong demand for rental properties. Average rents, 1 bedroom's rent average around £1,250 a month, 2 bedrooms for just around £1,700, 3 bedrooms at £2,400 per month. Prime rental growth in Manchester was higher at 18% annually, driven by the premium segment of the rental market. And just for clarity, the prime rental market is basically new build properties where they've got a lot more amenities like gyms, yoga rooms, co-working space areas, cinema rooms, reception areas and stuff like that, because that's the kind of growth that these are getting, because that's where people want to live nowadays, in more of the new, better quality, higher amenity buildings. Economical growth. Manchester's GVA has grown by 67% since 2000. And what you can see from this, in short, is that Manchester's economy since 2000 has been rising and is continuing to rise even right up until 2035. So even if you do look at an investment from there, or even over the next 10 to 11, 15 years coming, it's going to show great strength in what's happening in the Manchester economy itself. And if you look on here, the dark grey area and all the light grey area you can see there, that is the Greater Manchester area. The dark grey area where you see Trafford, Salford and Manchester, that is pretty much become the city centre of Manchester now, you could say. And that is predominantly where we focus all of our developments, because that is where the capital appreciation and growth is. So Manchester's got a population of just under 3 million people, 550,000 in the Manchester City in the dark grey area alone. It's the main driver of the northern economy, and there are 1.5 million jobs just in that dark grey area alone. The 5-year forecast moving forward, this is from JLL on their big report, showing that Manchester's house price growth and rental growth is still going to be very, very strong, even moving forward at the moment. Furthermore, now moving on to Sheffield, apologies. So now we'll talk a little bit about Sheffield and what's been happening in Sheffield. Now, for many of you that know me, Sheffield's a new city in terms of, we've not had many Sheffield developments in the past. However, we've been seeing a huge amount of growth coming out of Sheffield. And Sheffield is very, very close to Manchester as well, Leeds and Liverpool. So let's touch on the population and the economical growth there as well. So it's named the second fastest growing city economy in the UK. Sheffield has a growth rate of 12.4%, developing 3 times faster than London. If you look, Sheffield's economy is worth approximately £15.5 billion per annum, Estimated population growth by 2034 is going to be 62,000 people. And additional economic growth by 2041 is going to be 7.6 billion pounds. So we're seeing a huge amount of growth and potential within Sheffield, but you'll see from the prices, very competitively priced. In terms of the education, Sheffield is a thriving university city that attracts thousands of students from around the world for its high quality education. Many graduates choose to stay, drawn by the city's job opportunities and vibrant economy. Ranked as the 13th best university in the UK by the Times Higher Education is Sheffield, University of Sheffield. It contributes £2.5 billion to the economy and supports 30,200 jobs nationwide. And it welcomes 10,000 international students annually. Sheffield Hallam University hosts the UK's largest modern business school. 94% graduates employment rate. Straight after they graduate, they get a great job. And 74% of research rated world-class or internationally excellent. And so this is what's attracting a lot of students to go down to University of Sheffield and the Sheffield Hallam University. In terms of the 5-year price forecast, you can see here, by the way, Sheffield falls under Yorkshire and the Humber. Over the 5-year period, total house price growth is forecast to be 14.2%. This places Yorkshire and the Humber, Sheffield, in the middle tier compared to the UK regions, indicating healthy growth, but slightly below regions like Greater London and Manchester, which have higher forecasted averages. The region's steady performance suggests ongoing demand supported by affordability compared to other parts of the UK. So these are just some of the top FTSE 100 companies that are based in Sheffield, and great job opportunities from all of these. And I'm sure you recognize many of these names also. So they're all based in Sheffield itself. Now let's touch on Birmingham and what's been happening in Birmingham. Birmingham is the second largest city in the UK and has been doing really well for the last 10 to 12 years. But let's go into a few more numbers and figures as to why. In terms of the infrastructure, the UK government's put in £6.2 billion of infrastructure over the last 10 years. It has the second largest international airport in the UK, 150 destinations, 10 million passenger journeys each year, and 1,000 new jobs were created. It has a great, like the London Underground and the Overground in Manchester. It has got the Metro link in Birmingham as well. It's got one line, 31 stops, and 4.7 million passenger journeys a year. But also what's more attracting people at the moment is the news story of the HS2 railway. It's basically the fastest train line in Europe, and it's actually currently being built to go from London to Birmingham. Currently, the train from London to Birmingham takes about 1 hour, 30 minutes. With this new infrastructure and HS2, it'll only take 45 to 49 minutes to get from London Central into Birmingham. So a lot of people that have been living in London are now considering living in Birmingham because it only takes 45 minutes to get into central London, but it's half the cost of living, and living standards and quality is better in Birmingham. So here's just some of the FTSE 100 companies that are also based within Birmingham. Again, I'm sure you recognize many of these names there as well, but they've all got an office presence and infrastructure within Birmingham itself. The population growth there, 2.6 million people. As of 2024, Birmingham's population is estimated to be just around 2.68 million people, reflecting steady growth over the past decade. Birmingham's population is projected to increase by 3.9% by 2028, so in the next 4 years alone. And it is estimated that over 10 to 12,000 of workers have been directed to or have moved to Birmingham due to a significant demand for skilled labor, particularly in sectors like healthcare, construction, and education. So it's showing you a lot of people moving into Birmingham at the moment as well, and looking for premium housing as well. In terms of the education there, 80,000 students attending the top universities in Birmingham, 49% graduate retention rate, and it's got 5 universities within Birmingham as well. And some of these universities, like Manchester, are in the top 10 universities in the UK. Job creation, Centres for Cities again, which I previously touched on from Manchester. You can see here Birmingham is ranked 3rd in terms of capital appreciation, job growth and population growth as well. And you can see the kind of businesses and infrastructure that's coming into there over the last 10 years as well. So again, great positive results in terms of investing into Birmingham for good capital appreciation and rental yields. In terms of the rental growth, Birmingham experienced 16.7% average annual rental growth in 2023, which is the highest among the big six cities. And the surge in rental growth is driven by a shortage of stock and strong demand from tenants. Average rents there, one bedroom is 1,075, two beds at just under £1,400, and three beds are about £1,750 per month. For prime rents, again, new build properties with amenities recorded a 12.4% annual prime rental growth, reflecting the robust demand in high quality premium rental properties. So the 5-year forecast for Birmingham, it sits there just a little bit around the same as Manchester. So both of them showing you great investment opportunities between Birmingham and Manchester, similar sort of pricing and everything as well. And that's according to JLL. So now I've given you a bit of an overview on the UK and the various cities that are doing really, really well. It's now time for me to tell you a little bit about Legacy, who we are, what we do, and how we help you to build your property portfolios. So to start with, we as a company have 3 separate divisions. We've got our UK property division with over 10 years of experience. We then have our citizenship and residency division, which works with 14 governments from around the world, helping clients to obtain a second passport, citizenship, or residency in other countries. And thirdly, we have our Dubai real estate division as well, which is fully licensed and regulated in Dubai in the UAE. Okay. As a company, we are actually a global company. We have over 400 clients all over the world. Africa and Middle East are our 2 biggest regions because of quite strategically where we're placed, but also because we fly in and out of all of these countries to be with clients and do seminars and webinars. Our head office is based here in Dubai. We have an office in Turkey, UK, and also in Spain as well. So, and like I say, we do have clients all over the world, making us a global company. In terms of when we work with developers, we do take a very strict due diligence process. We don't just choose to work with any old developer if they come up to us and approach us with any developments and sites throughout the UK. We basically go through a very strong, stringent vetting process. Firstly, we evaluate the developer's track record and company structure. We need to ensure that they've built, completed, and handed over thousands of apartments in the UK, and they've also got a minimum of 10 years track record in the industry. From there, we will conduct site inspections, pricing analysis, and market research to ensure where the developments are located are in cities and locations where clients can expect great capital appreciation and rental yields. We will then ensure mortgage options are available. There are many sites and developments around the UK where sometimes getting a mortgage can be difficult if they're not in prime locations, and especially for international buyers. For local buyers, it's different. They can probably get a mortgage quite comfortably, but we have to ensure that we can get you mortgages even as an international investor and buyer. We'll also review the rental market, yield forecasts, and service charges and budgets to ensure that it is going to be a great investment opportunity for our international investors. And then finally, we'll create marketing assets to effectively promote the developments and then take clients on. Okay, so you can see from there, start to finish, we do hold a strict due diligence process when we work with any developer. From there, we now, the reason so many clients choose to work with us is because we offer something called a full turnkey solution. We don't just sell you a property, we will actually handhold you through the whole process of buying a property in the UK. First and foremost, after the webinar, those of you that would like to sit with me, we would do what I call the investment consultation. It's a one-to-one meeting to find the right city, the right location, the right unit, all within your particular budget. Once you eventually decide to reserve a unit, we will then introduce you to an independent panel of lawyers in the UK. These lawyers do not work for us, they do not work for the developer, they work for you. Then you can ask them any questions. Is your money safe? Is your money protected? Has the development started? What happens if the development's delayed? You know, the lawyers are there to protect you and also to answer your questions. But at the same time, the UK is a very heavily regulated market. So they also need to do their due diligence on you as a client to ensure that the money that's coming into the UK. So they will do things like the KYC, know your client, source of wealth, where did your money come from to be able to buy that property in the UK, source of wealth and KYC. Sorry, forgive me. As well as that, after that, we will introduce you to UK-based mortgage lenders. Now, these lenders are fully regulated in the UK, but they are specialist lenders that do help international buyers and investors to get a mortgage, okay? We've been able to get mortgages for our clients almost globally. So Africa, Nigeria, Ghana, Zimbabwe, South Africa, Kenya, all of our Middle Eastern clients, so Saudi, Qatar, Kuwait, Turkey, pretty much any country and most countries around the world, we are able to get you mortgages. There are certain restrictions, and they'll be the obvious countries, but the clients that we deal with, we can get you a mortgage. Then 3 months before completion, we will introduce you to the full property management services. They will help to get your property tenanted, manage it, and maintain it. From there, we'll also help you to open up UK bank accounts if you don't already have one. We can help you with FX services. So if you wanted to convert your local currency into pounds when you're doing your exchange of contracts, rather than going to your bank, we work with regulated companies in the UK that can offer you a far better rate than the banks that you have bank accounts with. So we will help you with FX services if required. We can even help you with company formation and setup in the UK. A lot of clients, if they're buying multiple properties and building a property portfolio, it can make financial sense to put your properties into a company. And there can be certain tax benefits which I can happily cover with you in a one-to-one meeting. And then we can also help clients with investor and golden visa services in the UAE. So you can see from this, from start to finish, we're going to help you through the whole process of buying a property in the UK. Now, a lot of my clients ask me, it's great hearing we bought a property, but how am I going to make money from my property? So I'm going to touch on the property management side of things. So Legacy works with leading property management companies in the key regions in the UK. These companies provide a comprehensive lettings and management service, which allows you to enjoy all the benefits of being a landlord, but with none of the hassle. By using Legacy, you can generate an income from your home, which is what we call a true turnkey investment. And the kind of services that they will provide and help you with is they'll do the full marketing and letting service, so you don't pay for anything until they find a tenant ready to move in. They'll do the full tenant referencing and checking service, including credit checks, background checks, and taking a security deposit from the tenants to ensure that they are good quality tenants looking to move into your apartment. They'll do the maintenance and snagging service and the key handovers. So you may not want to fly in from your country all the way into the UK. So they will help you with all of this. They'll send you videos, pictures, and images showing you your apartment is perfect and ready for a tenant to move in. They'll do inspections throughout the tenancy to ensure that the tenant is looking after your apartment and not being damaged. They'll do inventory checks before and after the tenant moves in and out. And if there's any damage, it gets taken out of their security deposit. They'll replenish anything, or they'll repaint the apartments, and then they'll return the balance of the deposit back to the tenant. And then they'll also assist you with non-resident landlord tax. So again, from start to finish on the property management side of things, property management companies are great that we've been working with for over 10 years now. Mortgages. So a lot of clients ask me, can you tell me a little bit about mortgages? I just want to get a better understanding of it. So our mortgage services cater specifically to international buyers, offering tailored solutions to meet their diverse needs. With access to UK-based lenders, we ensure fully regulated transactions for our clients' peace of mind. Our offerings include mortgages with loan-to-value ratios averaging around 70%, providing substantial financing opportunities. And clients can benefit from competitive interest rates with options of both interest only and capital plus interest repayments. And whether clients prefer short-term commitments or long repayment periods spanning up to 30 years, we customize the mortgage durations to suit individual clients' requirements. Okay, so very comprehensive mortgage options available for all of our clients. Now, many of our clients ask me a little bit about the UK and get a better understanding of it. So there's the map of the UK. And I'm going to zoom in a little bit. I'm going to show you from here, London, Birmingham, Sheffield, Manchester, and Leeds. And if we took Manchester as a central location in this one, due to the developments I'm going to show you today. So Liverpool, it takes 45 minutes, to Sheffield, 50 minutes by train, Leeds, 50 minutes, and Birmingham, about 1 hour, 20 minutes. And that's all the way from Manchester. So you can see Manchester to the main areas of where our majority of our developments are is based in a very prime location to get around to all the other major cities as well. Oh, sorry. And then we've got Birmingham to London takes 1 hour, 20 minutes. Now, in terms of our developments, we have developments all over the UK to cater for all of our clients' needs, requirements, and budgets, as well as payment plans. To give you an idea, in Leeds, we have 1 development. Halifax, we have 2 developments. In Manchester, we've got about 5 developments at the moment. Sheffield, we've got 1. Nottingham, we have 2. Birmingham, we've got 3 different developments. And in London, we have 4 different developments. So in total, we have around 18 developments throughout the UK to specifically be able to cater for all of our international clients' needs and requirements, okay? Today, I'm not going to show you all 18, don't worry. I'm only going to cover our new launches and our featured developments that we have. So based on that, I'll tell you a little bit about the developments that we currently have. And I'm going to start by talking about Manchester, okay? Here's a bit of an overview of Manchester. That Manchester city centre is just there. And if you look on here, these are all the main sort of like iconic parts of Manchester. So you've got the University of Manchester at the bottom, Piccadilly and the Victoria train station are the main train lines that go into London, Birmingham, Manchester, Liverpool, Leeds, and all the other major cities. You've got Manchester City Stadium on the right-hand side, University of Salford, Victoria Riverside. You've got the Media City area, which is the most upcoming area of Manchester, with the BBC, ITV, Warner Brothers, Sky, and many, many other businesses are based as well. And right on the bottom there, you've got Manchester United Football Club. So it's just giving you a bit of an overview of all the major areas in Manchester, in the areas that we focus on. And all of these are about 15 minutes into the city centre of Manchester, okay? The green there shows you all of our developments that we've had in the last 18 months, but are also now fully sold out. But these blue ones are the ones that we currently have available and that we're offering our clients at the moment. These 4 here, or 5 here, sorry, should I say. And today we're going to focus a little bit on Berkeley Square. So I'm going to show you a very quick video on Berkeley Square to give you an overview. So that was Berkeley Square, a great development of ours in Manchester in a very prime location, right next to Media City. It's got 250 units, a mixture of 1 and 2 bedroom apartments, completing Q4 of 2026. Estimated yields are going to be 7% plus, and 250-year leasehold. Starting prices are £235,000 and 2 bedrooms at £346,000. To give you a bit of an overview on the location, you can see Berkeley Square there in the middle, right by the riverfront and next to Media City, 1 tram ride away. And then city centre, where it says Deansgate, Castlefield and everything, that is the city centre of Manchester. So it is very, very close to the city of Manchester, and it does sit in a very prime location of regeneration and government funding at the moment as well, okay? So to give you an idea, it's got great amenities, like most of our developments, communal rooftop gardens, private residence courtyard. It's got a hotel-style concierge service. It's then going to have a fully equipped state-of-the-art gym, co-working space area, nice residence lounge, and everything as well. These are just showing you some of the pictures of the bedrooms and a very high quality finishing all round, with lots of big windows letting in lots of light into the apartments and everything as well. And to give you an idea of the payment plans and how it works, we have got two different types of payments. On a one-bedroom apartment, it's £5,000 to reserve a unit now. You then pay your first deposit of 20% minus the reservation fee you've already paid after 28 days. And then balance on completion in Q4 of 2026, either by mortgage or cash. And we have up to 70% loan to value mortgage options available for international clients. That's the one-bedroom apartment. If you go for a two-bedroom apartment, which has been our most popular, it's £5,000 to reserve a unit. You pay 10% only as your first deposit after 28 days to the lawyers. And then after 6 months, you pay another 10% in 2025. And then in Q4 2026, you pay the balance by mortgage or cash, and 70% loan to value mortgage options available again. So again, very, very attractive payment plans, making it very affordable to buy into UK property for our international clients. The next development I'm going to show you is Sheffield. This is one of our new launches, which has had a phenomenal start. We only launched this last week, and we're already 35 to 40% sold out, and mainly due to the prices of these units. So this is just showing you an overview of Sheffield itself. And then there's the city centre of Sheffield. I'm going to zoom into that. And this is the city centre of Sheffield. And here I'm going to show you, these are all the major landmarks. So you've got University of Sheffield in the top left-hand side, and you've got Sheffield Hallam on the right-hand side, all within the city centre of Sheffield there. And that is where our development is located. It is literally walking distance to the universities. And to give it into context, into Manchester, it's about 55 minutes into Manchester itself. Okay, so a great location to be in, but not paying the prices of what Manchester is charging at the moment. This is the development called Belgrave. It's our new launch. And a bit of an overview on this. 108 units, a mixture of studios, one and two bedroom apartments. Completion is Q1 of 2026, so about a 12-month build or 12 months before completion. Estimated yields will be around 7.5%, 999-year lease on there. Starting prices, studios was £130,000. They're now completely sold out, guys. One bedroom is £132,000 and two bedrooms at £213,000. I will tell you now, a lot of the one bedrooms at £132,000 have been sold out, but we still have some very well competitively priced units available. This is just showing you a little bit of the area. So there's Belgrave there in the middle, and you can see Sheffield train station is not very, very far away. And it's super close by. And then you've got the Hallam University there. It's basically distance-wise 0.2 miles to Sheffield Hallam University, and Sheffield main university is 0.4 miles away. The train station is only 0.6 miles away. All of this is complete walking distance away from the development itself, making it a very prime location. This is just some pictures of the renderings of the outside of it. It is an existing building being reconverted into apartments. And here's some finishing of what the interior is going to look like, the kitchen, the living room, and the bedrooms. Again, built to a very high specification for our clients. And the payment plan on this, there's only one payment plan to be very straightforward. £5,000 to reserve a unit now. And then you pay 20% after 28 days to the lawyers directly. And then on completion in Q1 2026, cash or mortgage. And 70% loan to value mortgage options available again. And then now let's finally go on to Birmingham, and to give you an idea, an overview of Birmingham. So this is just giving you a brief of where Birmingham city centre is. There's the city centre just there. And zooming in to give you an idea of our developments. These are the major landmarks. So you've got Aston University there, Aston Villa Football Club at the top. Grand Central is where the main train station and New Street train station is. And you've got the Bull Ring, which is one of the most famous sort of like shopping centres in the UK now. And on the bottom right, you can see Birmingham Airport, which is, as I said, the second largest international airport. These are the developments that we had available, which are now sold out. And these are our current new developments that we have, literally all walking distance into the city centre again, very close to the train stations and also the shopping centres and shopping malls itself. So again, like all of our developments in super prime locations, and we're going to focus on this development here. It's called Smithfield House, which is our new launch, which we launched about 2 weeks ago. And I'll show you a very quick, brief video on this. So that's Smithfield House, and it's a phenomenal development, as you probably saw. Very, very few developments in Birmingham have the sort of amenities that this particular development has. It's a brand new build and a great location. So this is going to have 211 apartments, mix of 1 and 2 bedroom apartments, completes in the summer of 2027. It's just launched, it's started construction now. It's got estimated rental yields between 5.8 and just under 8%. Lease length is 999-year leaseholds. Starting price is at £219,000 for 1 beds and £309,000 for 2 bedroom apartments. As you can see from this map here, the Bullring, Selfridges, it's very well located, Grand Central, but probably one of the biggest is the HS2, the high-speed 2 train line. Again, it is walking distance away. And don't forget, in the UK, most people use public transport and walk a lot. So you can see from this, it does fit in a very, very prime location. Smithfield House there, and just showing you the regeneration that's going in that particular area at the moment as well. And this has got full amenities you can think of. So it's got a reception lounge, sky terraces, cinema and games rooms. This one also has a gym, private dining and bar area, co-working spaces, and quiet rooms available as well for people to be able to use. Don't forget, guys, a lot of people still work from home at least 1 to 2 days a week in the UK. It's become a very popular concept since COVID. Payment plans for this. Now, this has got an exceptional payment plan. I can't emphasize it enough, guys. It's very unique, very different. The first payment plan that we have is 5% now to reserve a unit. So it's 5%, not £5,000. But then after that, you could pay 1% monthly over 30 months. So in total, you would have paid 35% in total, and then you can get yourself a 65% mortgage. Balance on completion in summer 2027. And we can get you 65 to 70% mortgages. But what's the most attractive about this is the fact that you can pay 1% a month over the next 30 months, making it extremely affordable for most people. But I have a lot of international clients that said, look, we don't want to take regular exchange of currency, but have you got something else you can offer? So we've created a very flexible payment plan for all of our clients internationally, and we can bespoke this for you as well. So to give you an idea, it's still 5% to reserve a unit, but then after that, as an example, we've done this. You could pay 6% every 6 months. So after 6, 12, 18, 24, and 30 months, you could pay 6%, and then you still pay 35% as a total down payment, and the balance on completion in 2027, by cash or mortgage. So you can see from this, we're really able to bespoke these payment plans according to what suits your budgets, needs, and requirements as well. So please do inquire to find out more about that with us as well, okay? So how does it work to buy a property in the UK? I'm going to, last couple of slides, guys, don't worry, we're almost done. So First and foremost, you pay your £5,000 or 5% to reserve a unit. That takes it off the market. From there, within 2 to 3 days, you'll start your legal process with the lawyers, 28 days. You pay approximately £1,500 for solicitor fees. Then within 28 days, you'll do what we call the exchange of contracts. And then 6 months before completion, we'll introduce the mortgage lenders that will help you to get a mortgage in the UK. Sorry, guys, one moment. And then 3 months before completion, we'll introduce you to the full property management services. And then on completion, you pay your 65 or 70% cash or mortgage option, whatever you prefer. So that's a very simple process on how you go about buying a property in the UK. Now, before I go into the Q&A, I always like to tell my clients that we do have a very attractive referral scheme that we offer all of our clients globally. Most of our business is based on referrals and recommendations. I'd probably say close to 70% of our business comes that way. But basically, if you refer a friend, we're happy to give you £1,000 if they reserve a unit with us. And don't forget, you can get deposits as low as 10% to be able to get a property in the UK. So I now would like to open it up to some Q&As. Daniel, I believe we have some questions that we've been asked. Is that correct?
We certainly do. We have a few here from many of our different clients and prospects, that are in different countries around the world. So firstly, I have had this from multiple nationalities. The first one's from Uche, and Uche's asking, I'm a Nigerian resident with a Nigerian passport. Will I be able to still obtain a UK mortgage?
So that's a great question there, Uche. So yes, absolutely, you'll have no problems getting a mortgage. We've helped Nigerian clients in Ghana, Zimbabwe, and South Africa, and Kenya as well for many, many years, getting a mortgage. We've got lenders and specialist lenders that will lend for that as well. And actually, very coincidentally, as you brought it up, we actually work very closely now with Access Bank, Zenith Bank, FCMB, GT Bank, and Fidelity Bank. Now, they are Nigerian banks, but with the London office. So the mortgage options come from the UK London office itself, the branch, sorry, should I say. So getting a mortgage, a lot of people and my Nigerian clients bank with them. So getting a mortgage with them is not going to be an issue at all, but they'll do it through their UK office. But even then, you still have other international mortgage options available as well. So hope that answers your question. So yes, the second question.
So the second question is from Mustafa. For the mortgage, what are your thoughts on the current rates? Is now a good time to use a mortgage? And do we have to find a mortgage ourselves, as in the client?
Fantastic. So hi, Mustafa. Great question. Thank you very much. So I'm not sure if you guys have been following, but recently the UK Bank of England has been cutting interest rates and it's done it a couple of times now. And even recently, there's a new article that's come out saying that they are expecting to continue dropping interest rates. And going into 2025 and early 2026, they're expecting further cuts on mortgage rates at the moment. So when you look that most of our developments are completing in 2025, 2026, and 2027, is actually a great time to buy, because by the time the developments are completed and ready for handover, you'll find that interest rates have actually come down to kind of the levels, similar levels to what they were about 3, 4, 5 years ago. And so you should be getting competitive rates even as international buyers buying into the UK property market as well.
Brilliant, fantastic. And the third question is by Basola. So Basola is asking, is it better, great question, is it better to invest in off-plan or completed properties, in your opinion, here?
Great. Basola, hi, nice to meet you. Great question. So I always say to clients that when you're looking at property, there are two different strategies. If you're at an age where you're very close to retirement and you're looking to basically start making a rental income immediately because you're looking to retire and to replace your current salary, then I would always recommend go for ready complete, because it's going to replace your current salary that you're no longer going to be getting. However, if you're fairly young and you're looking at the long term, then I would always recommend going for off plan, because when you buy off plan, you're buying below market price. You're buying at today's price, but you're going to get capital appreciation at 7.9 or 6%, as I was showing you on capital appreciation, but also rents go up every single year. So if you were buying a development today that's off plan and then completing in, for example, 2 years, you're going to get capital appreciation anyway, and then rents will have gone up a couple of times. And the reason why your rent to yield ends up being higher is actually because you're buying at today's price, but you're getting rent in 2 years when the prices have gone up, once, twice at least, even by then as well. So I would always recommend, if you're not in a rush, then definitely buy off plan, because you're buying it at a much more competitive price, and you don't need that income. 400, 500, 600 pounds a month is not going to be life changing for many people to be getting that as a rental income today now. So hopefully that answers your question, but I'm happy to cover in more detail on a one-to-one meeting with you as well.
Great. And the fourth question is from Omar. Hello, Omar. I don't have a UK bank account. Will this be a problem?
Okay. So, Omar, nice to meet you. So yes, it's not a problem at all. We actually help our clients with our full turnkey services and solutions to be able to open up a UK bank account, before you even get a mortgage and everything, because in order to get a mortgage in the UK, you will need a UK bank account. Also, many of our international clients, like yourself, don't want rental income coming in and then being converted to whatever currency or country you're living in. By having a UK bank account, all the rent and can come into there, and when you want to, you can basically transfer it back to your home country later on down the line if you wanted. But yes, absolutely, we can help you to open up a UK bank account, and most of the time even come in multi-currency as well. That's not a big deal at all.
Okay, great. And the final question for the moment is from Ibrahim. This question I've had so many times myself, Evan, to be honest, and you've heard me before. My children are hoping to attend university in the UK, but it will be in a few years until they're finished schooling where they are. Are we able to use the property as an investment and also move my children into the property when they're actually at university?
Excellent. So Ibrahim, again, nice to meet you as well. So absolutely, you own the property, it's your property, you can do whatever you want with it, basically. We've got lots of clients who are sending their children to places like Manchester, Birmingham, Sheffield for university and education and everything, but not for a few years, but it's better to plan ahead sometimes, right? So what you can do is you can put a tenant in there for the next 1, 2, 3, 4, 5 years. And obviously, if you give the tenant enough notice as well, like usually a year before your children are going to move into university there, you can tenant it out to another tenant. And then when your children are going to move there, the tenant moves out, the property management company will get it refurbished and painted and decorated and everything, or you can do it yourself to the way you want. And then your children can move in there as and when they're ready for university. Let them do university for 3, 4, 5 years. After they move out, you can either sell the property or you can keep on keeping it, and then you can rent it back out to other tenants basically as well. So full flexibility, it's your property, you can do whatever you want, you can sell it and lease it out or rent it out as and however you want. So hopefully that answers your question.
Brilliant. That's all I've got for the moment. Obviously, I'll be speaking to you all throughout the next couple of days. So thank you on behalf of myself for attending, because obviously I did reach out to quite a few of you. I've noticed quite a few of your names flash up. So yeah, on behalf of myself, thank you so much for attending.
Thank you very, very much, guys. And I look forward to meeting hopefully all of you at some point on a one-to-one meeting and in person when I'm flying into the country, wherever you're based as well. But please do feel free to ask us any questions if you want. We are going to be recording this. So once it's recorded, and if you just want us to have a copy, we're more than happy to send it out to you, and then you can share it with your other friends and colleagues and everything as well. But thank you very much again for everyone that's attended. We really appreciate your support. So have a good evening, everyone, and look forward to seeing you all next week. Thank you.